The UK's Prime Minister has lost a key Brexit ally, the fourth member of her top team to exit within 6 months. Home Secretary Amber Rudd resigned over an immigration scandal that's marred Theresa May's cabinet as Brexit battles come to a head. Rudd faced allegations of misleading Parliament over targets for deporting illegal immigrants. Ministers meet this week to discuss post-Brexit trade plans, and we also have local elections taking place in the UK, which has perhaps heightened the emphasis on this particular story. Joining us now, Julian Howard, Head of Multi-Asset Solutions at GAM. Very good to have you with us.
Morning.
Good to see you. So let's talk about UK assets. There's a number of things in here. There's the ongoing political context, which has to be pretty disruptive, I suppose, to hijack the big changes that we're seeing in the UK at the moment. And then there's, of course, the Bank of England story. So where does your focus on UK assets lie right now?
Well, I think what we're trying to do is actually trying to avoid UK assets as much as possible. I mean, the running joke is that it's the widowmaker. Anything you predict about the UK just doesn't come to fruition. You know, the currency should be lower given the massive uncertainty around Brexit, and now with Amber Rudd's exit, that only makes things worse. But as we've seen over the last sort of 18 months, or at least since the referendum, the UK doesn't follow the path. The assets don't follow the path that you would expect them to. So it's really a matter of trying to underweight UK equities and looking to other areas where the opportunities are better. But in the short term, I do see much more uncertainty. I mean, we should see currency depreciation from this point, but whether we will is not quite certain.
So UK is the widowmaker trade. If we did see that, I mean, that could lead to higher. If we did see a weaker pound, that could lead to higher stocks, of course. I've got this chart, which is around Bank of England expectations, and this is the number of hikes that the market is pricing in out into the future. And the point being, you know, you move from the blue bars to the white bars, and clearly expectations are coming down as to the number of hikes we get this year and into next. The weak data, that's enough to put the Bank of England on hold for a while, I guess.
I think it should be. I mean, Mark Carney's been quite confusing in terms of his forward guidance over the last 12 months. But I think if it came to the crunch, I mean, data aside, and the data is very worrying, if we actually have a real Brexit, perhaps a blocking vote from Parliament, which triggers a collapse in confidence in the government, and maybe some kind of general election again, or heaven forbid, a new referendum, then I think the Bank of England would be expedient, just as they were back in June 2016. I think you would see a rapid cutting of rates. And perhaps that's why they raised rates since then, to give themselves a little bit of room. So I would count on expediency if the worst came to the worst.
We showed Julian at the beginning of the program a forecast. Economists' forecast for the economy. Right after Brexit, they were expecting a big drop. We didn't see that. Now we've actually got it, though, with the data on Friday, and economists are expecting a pickup. Where do you see the UK economy heading right now?
Yeah, so I guess since Brexit, the story has been that the UK consumer has managed to kind of sustain the overall growth picture. That's actually starting to fade now. If you look at, for example, motor vehicle sales, that's starting to roll over. But also, if you look at the RICS UK Balanced Housing Survey, that's starting to roll over. Consumers are maxed out on their credit cards. Real wages are vaguely positive, but they're sort of flirting between negative and positive. So that support from the consumer, I think, is starting to fade. And that leaves the economy vulnerable, because you've got that on the one side, but you've also got corporate uncertainty on the other.
Are there decisions that the government could make which would help the economy here, or is the uncertainty just going to be there until we get an actual Brexit deal?
Well, I guess part of the tragedy of Amber Rudd leaving was that I think last week she hinted that having no customs union wouldn't necessarily be a red line anymore. But now that she's gone, we don't know if that's the case. So the assumption's got to be that the government's line is harder than it was previously, and that there's no wriggle room around the customs union, which I think if there had been some kind of flexibility around customs union, I think that would have given business the confidence it needed, and we would have gotten back into that sort of Beano scenario, Brexit in name only, which I think everyone could have lived with. You know, nobody cares what the name is, as long as you kind of stay within the customs union. So
yes, it wouldn't matter to you then if it was the customs union, a customs union, or a customs arrangement,
or just a good trade deal. Label it what you like, but as long as you retain access to those markets in a kind of transparent and seamless manner, then I think the business community would have been happy.